Oh boy, howdy, they said it wouldn't be done. They said he'd never change it up. He's changing it up. Tired of seeing all these stupid ads on Market Watch. Look at this. We're just doing the normal Google search now. Stock market weekly update. See how it went? Yikes. The voice isn't happy already. How'd the week go for us? Well, let's take a look here. Just at this little Dow Jones here. Starting off on the week, things down 1%. You know what? Really was hoping. I wanted to reach that 30,000 mark. Give me that Dow Jones 30,000. That's what we've been waiting for. Might be just a little bit to see it. Still though, I mean, already since first day of trading, now we're up just 1% on the year. But hey, that's perfectly fine. There's no dilemmas there. How about the S&P 500, huh? It's a similar looking chart. Down 0.85% on the week. Yikes. That's some rough stuff. Year to date now on the S&P 500, rocking up 2% actually. So let's take a look at what the NASDAQ has for us as well. Well, if you look at that, the NASDAQ's a lot more jagged, a lot more movement going on here, but overall only down 0.8%, 80%. Gosh, we just lost everything. People would be jumping out buildings. 0.8%. But let's look year to date again. You already know it, baby. Things up 3.4% for so far for the year to date. So not too bad. So what are we going to look at in terms of news, stuff like that for this week? What led the market? So I'm going to first talk about a couple winners and losers, see how they did. These are some bigger stocks as opposed to the chart I typically show. This one's going to be some bigger companies that people will know of more, instead of just showing this company went down 80%, but it's a company no one knows. So Intel here had a pretty decent little week here. If you look at this, on the week, this bad boy's up 14%. Talk about a decent little week. That's a very good little week. I love that, including Friday put up an 8% gain. Not bad. Intel, very nice for people who have been holding Intel, but what's going on here? Well, it was off of an earnings report Thursday evening. They reported earnings in which they beat pretty handily, like significantly well. I mean, this is a very good earnings report. So quarter four non-GAAP EPS beats by 27 cents and beats by 35 cents on a GAAP EPS standpoint. Revenue of $20.21 billion, up 8% year over year. That's big increase for that amount of money, $20 billion. Beats by nearly $1 billion off estimates. That's crazy. So as a result, this thing's up pretty big, and it should really be poised to just keep growing from there, honestly. Overall, trailing PE right around 16 of this company. It's a pretty cheap stock right now. Gosh darn. Next, we're going to look at Discover, which took a little bit of turn for the worse. I would consider it in the loser category. Reported earnings Thursday in the afternoon as well, after market closed. So they improved actually on an EPS standpoint. Total net charge-off rate of 3.19% increases 11 basis points from quarter four 2018. Okay, year-over-year increase. Quarter four credit card net principal net charge-off rate of 3.41, increase from quarter three and from quarter four of 2018. Okay, good, but the stock's down 4%. What's going on here? So quarter four provisions for loan losses increased to $836 million from $799 million, so an increase in losses makes sense there. People might overreact there a little bit. Total revenue net of interest expense comes in at $292.94 billion, in line with consensus, but that's up year over year. Some good numbers there. Total loans of $95.9 billion increased year over year. Okay, quarter four direct banking pre-tax income of $883 million increased by $9 million from a year earlier. I mean, good numbers again. Direct banking total loans ended quarter four at $95.9 billion, up 6% year over year, with credit card loans up 6% year over year again. Personal loans increased 3% year over year. Private student loans increased 3%. I mean, these are good numbers. These are really good numbers. Payment service pre-tax income, 41 million, rose by 18 million year over year. I mean, these are good numbers. Quarter four payment service volume of 66 billion, rose 9% year over year. Very good numbers. I must have missed something on the conference call. I didn't actually hear the conference call here because it's not necessarily a stock I'm super interested in buying. Maybe potentially after this drop. But I don't know about that, because if we're looking at Discover here, just look 5 years out. I mean, this is still a company that's up pretty big, in the past 5 years. Nothing crazy in the past year. Still up pretty darn big too. Nothing crazy going on, but up pretty big. What can I say? Forward PE ratio though, only really rocking a lovely little 9.4. That's like a less than 10 forward PE ratio. That's a good little PE ratio. Maybe I could go ahead and buy it. Who knows? But I see the issue. Obviously, if you see good numbers, the question's going to be guidance. So, thing gets hammered after operating expense guidance comes in higher than expected. So they expect to be spending a little bit more. Price target matches up with the current price pretty much right now. I mean, nothing wild, but there's Discover for you. We have Skyworks Solutions down 4% after a good earnings, but it's entirely because of the news that is right here, as we'll show next. We'll come back to Skyworks in just a little bit. Skyworks has been off the chizang. Is that a word? The chain? Off the chain? I don't know. I'm just trying to fit in. Broadcom enters two multi-year agreements to supply wireless components to Apple. So that's a huge hit to Skyworks. As Skyworks, they're 67% of their revenue is entirely made up through Apple. So that could be huge for them, depending on how what all components they're actually getting from Broadcom. $15 billion in revenue for Broadcom that right here that Skyworks is going to be missing out on. So definitely is the reason for the decrease in stock price here. But they beat quarter one revenue with upside guidance actually. So and EPS. So good for them. Gross margin was above the consensus too. Operating margin above the consensus as well. Cash flow from operations totaled $398 million. I just didn't know what to say for a second there. I was going to say 95, but then I tried to catch it. So good earnings report for them, but just bad news for them in terms of potential lost sales. But what's really, leading the indices this week? It's really going to be issue with the coronavirus. There's fear of what all this can do. There's obviously some very good earnings this week and so far this earnings season so far, but we've extended losses because of the fear of coronavirus. The major market indices all turned lower after the Center for Disease Control, CDC, confirmed a second U.S. case of the virus that has killed more than 24 people in Asia. So could be rough. I don't think it's necessarily going to be a huge impact for us in the States, actually, but overall global economy, this could have an impact for sure if you're considering it. But just stay safe out there, guys. Go to the doctor sometimes. I'm not the greatest advice on this because I never go, but you got to go to the doctor sometime. Don't worry. What can I say? People are selling off because they're afraid of a potential outbreak of zombies. You know what I mean? What are people going to do? They'll buy back. You don't have to worry. Don't worry too much. And on top of that, finally, we have some news regarding Boeing, as they potentially could be cutting production even further on the 787. That's rough. I mean, Boeing is getting rough. I don't know what else you can say. I'd warn you, just probably stay away from Boeing because I just don't know where this company's headed right now. I don't really trust it. CEO's out, so we're bringing in a new CEO into this. I just think this company's headed for a bad path for the next couple of years at least, minimum. It's going to be hard for them to make profits. It's going to be hard for them to change the business around, but they're going to have to. It's just going to take a couple of years, so keep that in mind. I suspect a dividend cut is certainly possible. I mean, they'll realize they're going to have to at some point instead of cutting all their business. I mean, just think about it. We'll see how it goes again. No one actually knows what's going to happen here, but that's it. This is your weekly update. Hope you enjoyed.